Should I buy a house in the UK right now? So if you're a first-time buyer in the UK, then you've probably wrestled with this question more times than you've checked on TikTok in the last 24 hours. And to be honest, it's a fair question because the headlines are all over the place. One minute it's rates are falling, next minute it's house prices are wobbling. And the next thing, the housing market's looking like a 1970s Pink Floyd LP. It's got great energy, but there's a really confusing narrative. So today I wanted to answer the question once and for all in a really clear and practical way. Is now a good time to buy? What you actually need in order to buy a house in 2025 and shortly going into 2026. And of course, the big one, how much can you actually afford? So let's get into it. What is actually happening in the UK housing market? Well, rates have been gradually dropping, and this is especially for first-time buyers. Lenders are starting to actually fight over your business again. And sellers, well, they're being a little bit more sensible. Gone are the days of people listing a two-bed semi in Broughton Astley for the same price as a small moon. And buyer demand is actually pretty steady. The market isn't overheated at the moment, which means there's less competition, fewer bidding wars. You can be a little bit more picky. It's not a bargain basement market. It's not a buyer's market, but it's a calmer market, sort of a bit buyery and a bit sellery. Think of it as walking into Next on Black Friday in that magical second when the stores opened, the sales started, and the crowds haven't quite arrived yet. The shelves are still full and there's nobody elbowing you in the ribs. What happens next? We don't know. So let's talk about what you actually need to buy a house in 2025. And this is the bit the headlines never tell you about. Here's your real checklist. You're going to need at least a 5% deposit. Yes, there are 0% deposit mortgages out there, but give yourself a head start. And no, you don't need to sell a kidney to get on the housing market these days. Lenders prefer if you've got both. For proof of income, if you're PAYE, they're going to want to see your pay slips and probably your bank statements. If you're self-employed, then it's going to be tax calculations, SO302s, tax year overviews, accounts, that sort of stuff. Ideally 3 years, but we can do with 1. The simpler the income structure, the smoother the process is going to be. And then there's your credit profile. It doesn't need to be perfect, but sensible. Late payment from 2 or 3 years ago, it's going to be fine. 5 missed Klarna payments in the last month, a bit less than ideal. And then there's brokers. Most lenders and underwriters do not speak the same language as human beings. A good broker can translate lender logic into human logic. And they're not just there to get you a mortgage deal, they're there to stop you overpaying because you clicked on the first shiny deal you came across. We really do earn our money. And that's essentially it. There's no black magic, no secret handshake. If you can come up with all of those bits, then you're in with a shout. And if you've made it this far, then I know what your next question's going to be. It's how much can I afford? And this is the one that keeps people awake at night. But I want to be totally blunt on this one. Online calculators are to mortgages what horoscopes are to economics. They're entertaining, but not deeply reliable. Here's what lenders are actually looking at when they talk about affordability. First, it's your income. And not just the headline number, but how stable is it? And then it's your outgoings. So we're talking credit commitments, car finance, student loans, childcare, overdraft use, subscriptions. How much do you spend in Lidl? And then, of course, your credit profile is going to factor in as well. And then there's a big one that a lot of people forget about, your age. If you're 57 and you want a 30-year mortgage, then unless you can show pension income, it's not going to happen. And then there's the lender's own policies and criteria. These change from lender to lender. And unless you know which lender is going to suit your case the best, then you're probably not going to get the best deal. And then there's also stress testing. Can you still afford the repayments if rates rise? And this is why you can take 2 people who work at the same company on the same salary and live next door to each other. And they will have different borrower profiles, different affordability. If you do talk to a broker, they'll be able to get you accurate figures because we work from actual lender assessments, not online calculators. So the question you've all been asking is, should you buy a house in the UK right now? Given everything we've already talked about, here it is, the answer to life, the universe and everything. If your job is stable, if you've got your deposit ready, You plan to stay in the property for a few years. You want stability rather than chasing a target. And you're renting and your rent keeps creeping up, then yes, go ahead. But then no, wait. Is your income about to change? Does your credit profile need a tidy up? Is your deposit a bit low? Are you thinking about moving again in a year's time? And the worst reason of all, are you buying just because your rent's high? Panic buying almost. If any of those things are true, then it's probably not a good time to buy. 2025 is shaping up to be a great year to buy a house in the UK. We've got a relatively stable market and rates are edging down. It's not perfect. It's not disastrous. Quietly favourable, mostly harmless, which in property terms is probably about as good as it gets. So whether or not you should be buying a house in the UK in 2025 is absolutely down to your individual circumstances, and nobody like me can tell you. But we can help. So if you're thinking about buying, don't know where to start, then I'm Patrick Weightman, your local East Midlands mortgage and protection advisor. Links are in the bio. Give me a call. Speak to you soon. Bye-bye.